Sorry about that. Good morning, guys. What's happening, YouTube? Bennett, Tindle, tradinganalysis.com, filling in for our fearless leader, Mr. Todd Gordon. He's actually going to be joining us later in the show. He's on a client call this morning. So, hey, guys, welcome. We do apologize for getting started a couple of minutes late. We've got our intro to roll there and get everything fine-tuned here in the background. So thanks for joining us. Markets continue to press on the upside. You know, last week we were taking a look at two different interpretations of the S&P, and what's interesting is the corrective pullback from that kind of lethargic trading action that we saw going into the June FOMC. It did yield a corrective pullback. We got a three-wave retracement to the downside, unfolded in a simple ABC measured move, and now we're continuing to press the upside. We've moved through the external 127.2% retracement, which we anticipated potentially being a zone of resistance given the kind of indecisive of trading action. But in addition, we noted some positive signs in growth in tech. We're continuing to see upside in not only tech stocks, but semis are coming back pretty strong. They've been leading the markets the past couple of days here to start the week out. And yeah, things are looking good. Apple is one of the charts that we brought you and mentioned given the sideways consolidation. Apple has been more or less sideways for nearly a year, as has many names, including Netflix. So Apple is seeing a pretty good impulsive response out of the fourth wave triangle that we were tracking. So very excited to take a look at that. Before we get to it, let's go ahead and bring in the trading analysis team. Good morning, Terry. Good morning, Alex. How are you guys doing?
Good morning, Bennett. Good morning, Alex.
Hey, good morning, guys. What's
up, Alex? Is it it's still warm over there, huh?
Yeah, incredibly warm. I just went for a couple of minutes to buy something for my son, and I was blown away by the heat. It's around 41, 42 degrees, so it's nobody's on the streets. We are boiling here.
You're
So
staying
super
indoors.
hot everywhere, especially up in the Northwest. This is unheard of to have 115-degree temperatures in Portland, Oregon in June. This is crazy.
Yeah.
And I hear Todd's about to get a big heat wave coming into New York this week also. So
Oh, is he really?
it's summertime, guys.
Yep, it certainly is. It's interesting to see the temperature range of the Earth, like the lowest to the highest, and how that fluctuates throughout the seasons. But speaking of crazy weather events, we've had some crazy weather events in Texas this year. So
I know 15 degrees here in the middle of February. That's not normal.
We got down to like 3 degrees, or I think we got, I don't know, it was ridiculous. So anyways,
Wow.
Hope you guys are doing well. So yeah, let's get to it. Any announcements? I do have I'm presenting as a guest at a webinar this afternoon. If you're interested, I'll be presenting at 3:15 Eastern. There are some fantastic speakers before that. You can get signed up for that in the description below. I did include the link if you want to check that out. So, and then of course tomorrow morning we've been seeing some interesting moves in crypto. Tomorrow morning Alex has his live show over on our Trading Analysis YouTube. Any other events you guys can think of at the top of the show here before we jump into the hard right edge? Nothing?
Yeah, it's all.
Yeah, nothing so far.
All right, I think we got it. Okay, so let's jump into it. I'm going to take them through the Motive Wave platform. We're going to look at the S&P, look at the NASDAQ. I'll take a look at that Apple count with you. And then we'll see what Terry has to say in terms of sector rotation. If that rotation back into growth and tech continues, we could have some significant runway ahead on the upside. So, guys, I'll be back in just a couple of minutes. Good morning once again. Thank you guys for tuning in. So let's jump into it. We're starting it off with the hard right edge of the Motive Wave platform, one of two key tools that we utilize here, not only at Trading Analysis, but on our Wednesday live stream shows. So first up, let's talk about the S&P 500. We are looking at an interpretation that I've been tracking, which has implications north of 4,300 through anywhere from 4,385 up to about 4,400 is where I see the primary Fibonacci resistance cluster that I do think could set us up for a corrective pullback later in the year. So what we've been tracking here in the S&P is regardless of the wave count off of the COVID lows, because there are a couple of valid interpretations, we've just been continuing to track each additional subdivision as an additional impulsive fractal. The market continues to deliver on the upside, so there's no point in finding the trend until we have a very good reason to do so. Going into the Fed meeting, we noted that given the inflation that we've seen recently, given the pent-up demand meeting the COVID supply chain constraints, based on that combined with some wave counts that I was tracking in the bond market, we did note the possibility that maybe the market was getting ready to price in Fed tapering as the Fed kind of let the cat out of the bag, but that just does not seem to be the case. So while those wave counts in bonds and yields did deliver and did help us identify some key levels, the implications of those counter trend moves, they just haven't materialized. So we're going to continue to chip away and stick with the long side of the market. So what we've got here is on the daily chart, we tracked a move that either originates from the May 13th or May 19th low. It really doesn't matter. The implications are the same. If you want to anchor your wave 4 where I have orange A, you're still going to ultimately end up with a similar diagonal. The reason I chose to anchor the wave 4 here into the May 19th low is given the fact that if you begin this orange wave 1 leading contracting diagonal from the May 12th low, you're left with an invalid leading diagonal. Leading diagonals of the contracting variety have progressively smaller segments of their wave structure. So 3 is shorter than 1 and 5 is obviously shorter than 3. From there, we got a decent pullback here in the S&P in the form of a 3-wave measured move trend. That was about just over 2% correction. Very typical, actually quite shallow compared to some of the moves that we've seen here in 2021 so far. From the daily chart, I want to take you down and kind of break you down the subdivision, the smaller degree structure at work here in this orange wave number 3. So down off of the daily to the 30-minute chart, here you can see that leading contracting price action. The market was getting a little exhausted here. We saw counter trend corrective pullback, reestablish support, and now we're continuing to move on the upside. In the near term, I do think we could see a pullback here to possibly 4263, 4270 in the S&P. But at the same time, this could ultimately prove to be just a 38% retracement, which is why I feel it's best to not attempt to counter trend trade these moves, but look for the completed corrective counter trend pullbacks to establish on the long side, sticking with the trend. So from the June 18th lows, where we had a nice ABC measured move correction, I see this as an initial 1-2. And what's interesting about this sideways correction is if I take you over here on the 1-hour chart back to the move that we had from the March 25th low, we saw very similar characteristics in this 1-2 after a 5-wave response. So we had 5 waves up from March 5th here into the March 17th highs. We had a 3-wave pullback, ABC measured move. We rallied 5 waves. We had a kind of a sideways consolidation demonstrating a lot of underlying strength. And this is something we noted with our members, just the similarities between that compared to what we're seeing now. You have 3 waves off of a 5-wave move. You now have another 5-wave move to complete wave 1 of the blue degree here, sideways in wave 2, and I see this market continuing higher. Additional upside objectives, 43.34 and 43.65 are key equality levels that we will be watching. All right, so that's the S&P. Let me pop you over to the NASDAQ. Here in the NASDAQ, we are tracking 2 interpretations. Both of them are bullish. The variations that you see here are this. In one of our interpretations, we are viewing wave 4 as completing May 13th, and this still being part of an initial 5-wave move. The alternate interpretation, which I mentioned last week, I was quickly beginning to adopt, essentially said that instead of wave 4 concluding here on May 12th, wave 4 actually did complete as an Elliott wave triangle into the June 3rd lows. Here's your initial 1-2 response. The sell-off into the FOMC kind of took you here in a smaller degree 1-2, and once again we are seeing upside progression in the NASDAQ. So we're into a cluster between 14,519 and 14,563 that could give us a little bit of a blue 4 pullback, similar to what we're looking at in the S&P, but we're going to continue to view these as buyable entries until we're presented with a good reason to see it otherwise. So the NASDAQ count continues to deliver. Small caps also look constructive. We noted a wave count for you here in small caps. So if I take you back last week, we were identifying an initial 5-wave structure. So kind of a similar count to the NASDAQ, except here we saw triangle completion May 18th. From the May 18th wave 4 triangle completion, we view this as the initial motive impulsive response. Here's your 3-wave structure to the downside that took you to about a 61% retracement, and then we were looking for another 1-2. I think we're getting ready to see a possible trade entry here on the Russell 2000. This is something we're actively exploring with our members. And then over to semis. Semis we discussed last week, and we said, well, semis has a wave 4 completion May 13th, and we noted the fact that we were probably going to see this 1-2 either complete here into the area of the previous 4th and begin rallying. And then our alternate interpretation essentially said, well, you haven't quite completed the 5-wave move, but your upside implications still remain. So market continues to look bullish. If you are interested in staying up to date with my work, I do put out video updates for our members Sunday night through Thursday nights discussing this in detail. So that's it for me in terms of the indexes. Let me take you over to the Apple chart really quickly. So here in Apple, we'll start you off with the daily time frame. And what we have at work is a sideways contracting Elliott wave triangle beginning back in September of last year. And what I want you guys to notice here is off of the daily, we are viewing triangle completion in Apple as the June 3rd low. From the daily down to the 1-hour chart, check out how the post-triangle move began to unfold here. We have a initial, and in fact, I have to take you down to like a 15-minute chart to really clearly see this. You have an initial 5-wave structure that was met with an ABC sideways measured move. That was your first 5-3 response from the triangle, and we have since seen an additional subdivision or degree of structure, if you would, and we're now into some resistance. So while I do like Apple, in terms of trading it, I think if you're looking to trade this, you need to await this initial 5-wave move, and this is exactly what we're doing with our members. We're tracking these initial breakouts very diligently, patiently, and awaiting those wave 2 corrections for the trade entry. So Apple looks great. Apple's bid, short of any surprises, I think this name will continue to deliver and is not far away from fresh highs. Another name that looks interesting is Netflix. We're not going to take a look at the chart. I think Terry is probably going to mention that in sector rotation. So that's it for me. Let me check through the questions. I don't see anything regarding this analysis. I think you guys just want to get to the sector rotation and the world of macro and probably some crypto. So that's it for me, guys. Let's go ahead and jump back over to the team here. Any thoughts, Terry or Alex, on those counts? Do you like what I'm doing there with the post breakout in the S&P and the NASDAQ?
Absolutely. I mean, absolutely. We had been cautiously moving forward, and I think every step that we take, we do on purpose as we analyze the opportunities as well as the risks. So, I'm glad to see that we are moving higher, but as we move higher, I think you're going to see on some of my charts we're getting a little bit time for we're playing. We need to play catch up to some of the moving averages. Let me just say that. That doesn't mean the uptrend is going to fail, but we certainly have seen an acceleration, especially in technology. So I'll get into that in a moment.
All right, sounds good. Yeah, no, I appreciate that, Terry. And to your point, there are certainly many names that have seen quite a move and are likely due for some consolidation. What's interesting here in the S&P is while I am looking for that 4350, 4385, maybe 4400 objective, this still paints the picture of a correction later on in the year. So we'll see what happens. I think it's going to be an interesting rest of the summer. And yeah, so that's it for me. Mr. Terry Long, sir, I see you have the screen. You're ready to go?
Yes, sir. Throw it my way.
Here we go, guys. Let's hit it. Taking you into the Optima platform. A little bit of our RG sector focus.
Yeah, I thought I had it ready. One moment there. That moved over there. All right. Hello, traders. I'm Terry Long at tradinganalysis.com here with your weekly sector focus. Last week, we saw the indexes shrug off any fear of the Fed or inflation speak as both the S&P and the NDX rose to new all-time highs. Now, rebounding sharply from the prior week's drawdown. Now, here's last week's look at the performance of the index and the sectors. Look here. The S&P only spent 1 day below its 50-day simple moving average before rebounding sharply on Monday, and it continued to move higher through the rest of the week, ending up 2.74% at 42.8070. In the prior week, the NDX barely saw any declines and has now recorded 6 straight weeks up in a row, and seeing another 2.1% gain last week up to 14,385. Now, Friday's action in the index was the only down day for the week as it pulled back marginally from the all-time high set on Thursday. Now, the energy sector last week recaptured the majority of its prior week's 6% decline, and financials even saw a 4.8% rise, followed by the beaten down consumer discretionary sector, which had pulled in a 3.5% gain on the week. Now, the technology sector rose only about 2.2%. That was just slightly less than the S&P's 2.7%. Now, our newest sector leader, real estate, only saw a meager 0.81% gain, but it still beat out the utilities sector, which was the down about 0.2% on the week. Now let's take a look at Monday and Tuesdays. So Monday's price action here was really dominated by technology, as we saw the XLK and the XLY lead the sectors higher. Growth stocks outperformed value stocks again, as the IVW gained 1.28%, the IVE lost 0.89%. Now, so I just showed you the XLE rebounding last week, but now again, it is continuing a pullback, almost down 4% this week, down 3.85%. You know, for these past 2 days, over here, the NDX has risen 1.59%, while the S&P is rising, but has only risen 0.26%. That's nearly a 6-to-1 ratio on gains in the tech-heavy NDX 100. Let's take a look at our overall weekly RRG here. Now, sector leadership is trading back and forth between energy and financials. Let me zoom out just a little bit and show you this really large hook that formed in energy, right? So we had energy and financials back here on the end of May. So 1 month ago, we had communications pushing down, financials and energy pushing down. And then watch the formation of the hook down here in the XLE. So at this point, financials had overtaken energy, or energy had pushed below financials. But that hook started forming, which frequently returns these leaders back up into, from the weakening quadrant back up into the leading quadrant. Now, the financial sector does also appear to be starting a hook of its own, but this the upward momentum shift in the XLE dwarfs that of financials. Just compare the length of these tail segments and you can see what I'm talking about. So that's the velocity factor. So we've got a huge velocity pushing energy up, but it's going to be a bit of a rocky road as it plays out some sort of fifth wave here. Now, holding out here in the leading quadrant is the real estate sector. However, the materials sector is now seen pushing and following the industrial sector down here into the weakening quadrant. If I pull this back just to Friday and animate, that's Friday. This is Monday and Tuesday's price action on the last bit of the tail, and it's showing you the continued follow through of materials towards industrials. Now, at the same time, look at communication sector. Look at there. The communication sector continues to demonstrate rising momentum as the vector heading pushes northeast back now into the leading quadrant. And if we look at a price chart on the XLC, let's get this open here. You'll see the XLC is moving higher above its 20-day simple moving average. That's this green line, and it is now setting new all-time highs. This week, federal judge dismissed the FTC and state antitrust complaints against Facebook, and Facebook is now seeing all-time new highs. I'm not going to pull that chart up, but that's one that's in that communication sector. It's doing well. Now, still down here in the lagging quadrant are technology and the consumer discretionary sectors. Now, despite some recent evidence of returning momentum, these two weekly vectors continue to point to the left, except for technology now. After Monday and Tuesday's price action, I'm seeing the hook form back towards the northeast again here in technology. Now, this blue color in the technology vector tells me that an improving trend is at work. Now, below average market strength has been the norm for these sectors for a while. It will take more than one big up week to return these sectors to the leading quadrant. Nevertheless, we've seen some early signs that these sectors may be in the early stages of recovery. Let me go ahead and pull a price chart of the XLK up. So, despite a position down in the lagging quadrant, do you know the XLK just posted a new all-time high? Now, this is what I was talking about. We're running very high up in the channel. So I think we're going to find some near-term resistance. We're also running high above the simple moving averages. And a lot of times we just need to let these guys play out some sort of consolidating move. Now, that consolidating move does not have to be a catastrophic move down, okay? It certainly, all it has to do, and we've seen this a lot in Google, where we've seen the stair step rise and then move sideways, rise and move sideways. Well, in the XLK, we've had some pretty good size overlapping corrective moves here in the springtime. Maybe you think it's time we get some sideways correction before we continue to push higher. So I'll leave that to Bennett to explore. So let me go back and let me finish up here with the stocks here in the improving quadrant are healthcare, utilities, and staples, but they don't really look healthy, pardon the pun. Now, while the XLV had seemed really to be improving here with the northeasterly vector a couple of weeks ago, a little bit last week saw the vector roll to the south with continued momentum decay evident in the staples and utilities. And then as we roll into this week, we can see that continuation is pushing these guys lower. So nothing coming out of the improving quadrant right now, but the shining stars, you got an all-time high in XLK. XLY is actually seeing some velocity reductions here. So I'll tell you, the RRG for the XLY is still kind of ugly and in disarray, similar to the XLK, but I think there's some interesting stuff happening there. I'm going to take a look here and just show you. This is the overall top 30 stocks by market cap in the XLK. And you can see, I don't really see a common theme across everything here. It's really scattered and laid out, but a lot of these stocks, and especially semiconductors, that have been pushed over here in the lagging quadrant, are starting to rise, which means rising momentum, rising investor interest, and I think that's gonna play back into the market here. I also track the SMH. The SMH is a subgroup of the XLK containing the semiconductor stocks. Strong overhead resistance level had been tested, and now I believe we have broken through that overhead resistance in the semis, and we get this semiconductor group organized. You can see a lot of hook formations, a lot of northeasterly vectors, and indeed a large group of stocks showing improving trends here in the semiconductors. So I'm going to leave it there, Bennett, and we'll explore more of this with our members in the member webinar.
Very good, much appreciated, Terry. Yeah, I was just looking at the XLK chart there, and it keeps trying to challenge that trend line. It is a little bit daunting, so we'll see what happens. All right, excellent work, excellent work. Yeah, that new move to do highs in semis. The SMH, the SOX, both have been performing remarkably well. Nvidia north of $800 a share. Talk about an incredible mover. That thing just continues to extend its subdivisions. There's apparently no end in sight for that impulse. But anyway, NVIDIA has been pretty incredible. Mr. Alex, sir, are you ready to jump into the mix? Let me go ahead and pass you presenter. Terry, you're going to have to pass it. I don't have organizer status. Oh.
Okay, just a minute.
Wait,
I'll get
it looks like he's...
Make presenter. There you go.
All right, guys, Alex is going to take you through some macro, and we'll be back in just a second.
Okay, so let's look some of the macro themes. Not much happening after the last Fed meeting. We are observing this price on the 10-year bond. So it's actually the European fixed income market. So in general, we are still tracking this consolidation here, and by the default, the move out of this very nicely defined trend channel implicates probably that we are in the fourth wave. So according to this, this inflation narrative will be of a temporary nature, and then the higher deflationary forces will still keep the trend on the upside with deflation. So for now, even technically, at least in Europe and a little bit less in US, because of the more vibrant economy, I'm not going to buy this inflationary craze. I just think that the Fed is this time in the right spot regarding this inflationary thing as the transitory one. Looking at the US 10-year yields, we are consolidating here. So even if you put this in the Elliott wave perspective, this could be still a third wave. On the upside, no downside and no upside. We are focusing around this 1.4%. And I think sooner than later, potentially when summer trading is over, we might see this push on the upside and try to recap and test these resistance levels close to 2%. This looks like a consolidation. For now, we only have a 3 waves down. It can morph into a triangle or something else. But for now, I'm not going to look yields to fall further much lower. So maybe a little bit more inflationary picture in the US, but in Europe, even in the US, I think it's going to be a transitory for 1 year in advance, and then the higher kind of a macro narrative around the deflationary forces, technology and demographics, I think will kick in as the economy will balance itself. So let's look dollar index. And our current interpretation is that we are looking for a 5-wave move after this latest low, which we label as a possible small truncation in the 5th wave. Truncations are rare, and it's a phenomenon in Elliott wave. Well, when the last sequence actually doesn't post the visible new low. So as you can see here, we didn't post marginally even the new low. We were very close. So that can be kind of identified as a possible truncation, especially as this sequence can be broken down into a possible 5-wave move lower. So I am expecting still a dollar strength up to these first resistance levels, which comes around 93.47, and then a possible small pullback, and then a continuation. This is in a C wave up towards 96, 98 levels towards the end of this year. So I think this correction in dollar will take much of the 2021 even until the end, and maybe even beginning to January 2022, depends how time this B wave will consume, which can come into different shapes and forms. So let's move to gold, which has been a subject of the many kind of analysis and narrative, inflation narrative. We posted this X wave, and then we are dropping now into clear a 5-wave sequence, which means that the gold will have a more developments on the downside. It's kind of a matches dollar index from this point, 5 waves down, potentially as in dollar index 5 waves up. In other commodities, you can notice the same. And after a B wave pullback, I will expect another development to the downside, which also kind of matches, if you look from the time perspective, around December 2021, January 2022. So it kind of matches with this ABC pullback in dollar, and then potentially gold can have its shine for the move on the upside. I think in this situation, gold will feel more in deflationary situation than inflationary one, because even if we get inflation, we will get it to, let's say, 2.5%, and until we cross 3.5, even 4, gold doesn't play the role of the inflationary hedge. So I think in this situation, gold might advance in a potential inflation drop-down expectation towards the end of the year. And then when deflationary forces kicks in and the economy balance itself, we might see gold move on the upside. So the same theme is in silver. Silver also has been a theme for the bullish outlook. We were looking for, there is a various form of these corrective patterns. So I still think that we will see some type of a move lower towards this 2120 levels in silver before we go on the upside. Interestingly enough, I have one silver longer term chart, and this is from almost beginning of 20th century. And it looks like we are in some type of a 5-wave sequence. If you look this from 1932, there is a wave 1 and 2, a nice push up in a wave 3, very big extension, pullback in a wave 4. This was a complex correction, and then we have something which looks like a 1-2 up in 3, and this is some type either finished 4th wave or some type of a further consolidation, and it looks like we're going to have a little bit more upside in silver towards 2022, 2023. I still gonna pair this with dollar index, maybe a small drop to this 2021 level, which is also a smaller time frame, and then a further advance towards this 34, even 44 levels for potential end of this 5th wave. But it's interesting chart on this, if you look this monthly scale. On cryptos, I think we are in the similar situation as in gold. So we do observe and we announced that a couple of times before, and we were pretty conservative on cryptos, which was not very well accepted. But on the end, the longer macro teams are going to win, I think. So we still count this as a potential 5-wave sequence. I'm just still thinking, and we discussed that on our members webinar in the crypto section in trading analysis, what will be the macro event that might actually label this as a final fourth wave around 20 to 22K, and what will be the reason to push the Bitcoin on the upside? There might be the same as gold, potentially deflation, less hawkish interest rate perspective. So it's still to be seen. But for now, currently, we have a clear 5-wave move down, and I'm looking this to be more of a complex nature on the upside. So I'm looking for some type of a WXY correction here in cryptos. So if you close this up, 40 to 42K, I'm not going to even think to be bullish until we surpass that. Especially, I want to see a 5-wave move on the upside. And there is evidence clearly now developing that will not be the case. So this all, from technical perspective, is telling us that cryptos, especially Bitcoin, are in the corrective mode. This I labeled as an ABC in W. We might see a little bit more downside in X, another ABC towards this 40K in B wave, and then pretty much soon, in a month or a little bit above that, we might see another 5-wave sequence towards the end of the year, reaching this 20 to 22K. So I'm carefully observing this. So as you can see, clear resistance levels are around 41K. If we measure this measured move, we need this end of this X wave. So then I will be able, but I think they will match with this resistance level. So especially if I get this X wave, it's almost going to be pretty certain that we are in a corrective pullback and that Bitcoin will disappoint many bullish hearts out there, and it will just continue to drift lower in another, as my clients or our clients in trading analysis called it, a horror scenario. So we might get down to this 1820K and then potentially continue in this 5th wave sequence. So that's from my end, guys. So if you would like to join me tomorrow for a little bit more thorough analysis, you can join the Crypto Lab on Trading Analysis YouTube channel. So back to you, Bennett.
Very much appreciated, Alex. Thank you so much. And I want to welcome in our guest. No, I'm just kidding. What's up, Todd?
Hey guys, how you doing?
What's happening,
What's up,
man?
boys? Great show. Great top quality as always.
Thanks, man. How are you doing this morning?
I'm good. I'm good. Just hanging, listening, getting caught up on the markets here, and the trading analysis team is where you do that. So great show, guys. Interesting times, huh?
Absolutely. 2021. Did we expect anything less?
I didn't expect the well, you know, it's interesting how the whole, you know, the financial community grabs a hold of a narrative, just because I think the speed of information is so fast now. You know, I think, you know, when an idea would sort of begin to make the rounds, say back in the 70s and 80s, what was the medium of exchange to get the information out? Telephones, the quotrons, newspapers. Now, obviously, you know the case. So, you know, I just, when the growth trade was deemed to be dead, boy, did the idea that value was full on, boy, did that become rampant. And then all of a sudden, you know, we did that for 4 months, and that we just came off. And while that was happening, the inflation trade was ripping, and boy, everyone was convinced that inflation was here, and we're starting to see evidence that that's backing off, and it maybe is transitory. I don't know, it's just super interesting. It's like fundamentals are really important in the market. The technicals are really important, but it's people's reaction to both the fundamental and technical developments that causes the market movement, which is behavioral finance. So I don't know. I think it's I just that's what I love about the markets. You wake up and it's a different kind of thing every single day. But anyways, how about AMD? Back up. Go ahead, Alex.
Congrats on the test, man. You didn't.
Thank you.
Yeah, so you didn't share that with us publicly. So finally, the wealth management is kicking off.
Yep. Thanks so much. Yeah, I went solid dark for 2 weeks. I didn't do anything but that Kaplan book. Didn't do anything with my family. Nothing with trading analysis, and just hammered through it in about 2.5 weeks. Guys take like 3 to 6 months to get through this thing. It's a bear. Like, I took this test about 15 years ago, and it was like right when I was like studying. I think I was trading for a prop firm in San Diego. I studied on the beach over the weekend. Now it's a completely different test where it's a gatekeeper to this new independent arm of wealth management that's booming, the RIA. So they made it really, really hard. But thanks, Alex. I appreciate it. Yeah, we're launching. I've got the next setup call tomorrow morning. Talking to clients coming on board, and it's super exciting. This is something I've always wanted to do. This is, just I'll take a quick victory lap here, just because of the quality information you guys just heard here. Trading analysis. I always wanted to build a business that was transparent, run by traders who are doing hardcore right edge of the chart analysis. No real fluff. No cheesy sales marketing tactics. Always try to be true. Because I also knew, obviously reputation is everything, I think, in this kind of sea of a lot of pirates, let's call it that way. And I knew I'd want to do wealth management. So it's really pretty exciting to get the business to the point where we've offered a quality research product for a decade now, and now we're going to go into the wealth management side. And I can tell you, I'm shifting my mindset. I'm increasingly becoming a viewer of this content like you guys, where I'm learning and getting my market cues from these guys, and I'm thinking about more what it takes to run the money management business. And I can tell you, though, the one thing that I'm learning as I'm talking to clients coming on board is this. And I wonder if you guys are in the same situation. It's people come on board, and their biggest, they're talking to me when I do officially launch, which should be here in a couple of weeks. We've got to get through some final legal and stuff, but the most common theme that I'm hearing is people are so concerned about loss of principal. Okay, what happens if I get in the market now and it drops? Okay, and depending on what stage of life you're at, that's really, really important. But I think the bigger threat is that one that people aren't talking about is loss of purchasing power. It's not being in the market. Okay, I hate to be a long only sort of mutual fund stockbroker, but I have the ability in my money management business to take my clients out, and we can buy SPX put options if we want. But I do believe, and I have believed for years, that we're in a strong bull market. I was just looking at my individual account performance. I've outperformed the S&P now for 3 years in a row, and and 80% of my money is just being in the right stocks. I stayed with technology. And now I'm starting to that's coming that trade's coming back into fashion. So the point is, guys, is like, I think a lot of people I'm talking to are underinvested, have not been exposed to this market as much. I'm constantly talking about how I've been very long in this market, as a lot of people have been very cautious to be long. And now all of a sudden we are starting to get a tick up in inflation. And if you even stay at 2.5%, 3%, for 10, 15, 20 years, that eats away at your buying power. And you have to be in the stock market to overcome inflation at whatever rate it might be. So I think people are worried about the wrong thing, which is loss of principal. It's not that. Yes, I do think there will be a correction. Looking at our Elliott wave models, that could be some distance in the future. But I think inflation is the near-term thing we have to worry about. I don't think it's going to become rampant. But 2% compounded year over year, that really is something to be concerned about. And you do see prices going up. You do see some technological advancements are deflating prices, but there are other inflation forces happening in other categories of this economy, and you have to have some way to have your money invested to combat the sections of this economy that are experiencing inflation. So the biggest thing that I'm seeing, and I'm talking to new people coming on board, is they're underinvested. and they've missed out on a lot of this market. And, you know, they want to be with somebody who can get them sort of back on track to keep up with loss of purchasing power, but not guaranteeing and not saying I have the ability to sidestep major corrections. I certainly have tried the last 20 years of my trading career to be able to navigate those. I've traded through a few major bear markets, so I'm super psyched. So anyways, thanks for that. I don't have comments up, so I don't see anything coming through, but you know, so we're going to be full service. We're going to be research, and we're going to be money management, which there's a very few businesses out there, you know, with such a quality team. I'm going to have on both ends.
Yeah, Todd, there is a viewer which would like to address you. He asks about your current email address regarding wealth management. So
Yeah.
what is the current address people can write to you regarding this?
I'm still, I got to get Tristan set up my Inside Edge one, but I'm still using Todd at Trading Analysis for now.
Oh, okay.
Todd,
okay.
Yep, Todd at Trading Analysis for now, and I'll switch over at some point. And we are going to do an offer. We're going to do something coming up. We're going to do a full assessment. We're going to do a full assessment of your financial position. If you want to come and say, look, let me provide some information to you, and we'll do a full breakdown. It's normally a 3 or 4 hour process. I'm going to do it in conjunction with my new firm that I'll be working with. I don't know if I can officially announce it yet. I will have my own legal entity, but I'll sort of be a subsidiary under them and using them for back office and stuff. But I have a team of 2 CFPs who are certified financial planners where you can do a full financial assessment. There's going to be a special, usually it's like $1,000 or $2,000 process if you want to just get some financial planning. And also, you know, so we're going to have an offer on that coming up. And also, you know, it's important. I don't want you to, you know, take all your money and say, I don't want to trade anymore. I think it's good for you to be involved in the markets. But I've always said at Trading Analysis, don't use any more than 10 or 15% of your money to actively trade in the options market. You know, if we feel really strong and Bennett, Alex, and Terry on the team see a sustained market drop coming, okay, you know, maybe we can take equity exposure off the table. But in terms of really actively trading options, leveraged options markets and crypto markets that have unbelievable volatility, you know, only do it with 10 or 15 or 20% of your money. You shouldn't be doing it with anything other than that. The rest should be professionally managed. So that's the other part that we'll be offering, is the rest of your capital in a well-managed portfolio. And again, I have a big team. It's going to be me on the front of my own legal business, but I've got a really good team behind me supporting me on the research, on the financial planning, tax side, and that all comes into having a good trading account. And, you know, the other thing, and I'll stop here in a second, you know, the biggest thing for me is when I was trading at a hedge fund on Wall Street, there was a transition that I went through when Alex and I were first working together, where I got comfortable with the money that was at risk. I was trading scared money in the first probably 5 or 8 years of my career, and I would second guess my stops. I wouldn't sort of let my trade ideas go all the way to fruition because I wasn't confident in the risk capital that I had deployed in the market. Once I got comfortable and I understood it was both a combination of my own personal money and the money that I was allocated on the hedge fund, once I became comfortable with that money, I knew the percents I was risking per trade. I knew that, you know, it was accepted both from my boss's end, from the money I was trading for the hedge fund, and it was okay with the percent of my personal wealth being risked in the market every single day. When I was okay with that, that's when I started trading better. And that's when I started to have much more consistent results, is when I was confident with my risk capital. And I think the same could be said for clients of mine who eventually come on when we carve out a plan and say, look, this is your trading capital. This is okay. If, let's say, God forbid, we cut it in half or you lose it all, is it going to be detrimental to your plan going forward? Obviously, the answer is going to be no, but I think you're going to see that your trading and your confidence in your risk capital, because it fits within the context of your plan, will improve, and that's when you start trading better. I can't promise. I certainly won't promise, but it happened for me, and I just want you to keep that in mind, that if you don't understand the money that you're trading, how it affects your day-to-day life, you're probably trading with less confidence than is ideal, and it's probably causing you to make some bad trades and some scared trades. And so that's another thing to think about. So information will be coming out. I'll have an email going out. Be sure to get on our email list. There's a wealth management section at Trading Analysis. If you want information, I'll have something going out here probably today. How to take advantage of that and more information. So thanks, guys, for allowing me those couple minutes to talk. But guys, what do you think? AMD above 90, huh?
Yeah, absolutely. I was just taking a look at the trade I put on with members. We're just getting over a double there as we break through 92. So love the move in AMD.
Mm-hmm.
Awesome.
Yeah, it's up 3% this morning, leading the semiconductors higher, which is, you know, that's the thing. I think semiconductors are starting to get their legs underneath them, Todd, and the momentum's building. I think that's going to help pull the XLK back up into leadership eventually. And but
Yeah,
you know, I was
yeah.
telling the members, I don't know if you saw it earlier, the viewers, despite the fact that the XLK has been in the lagging quadrant, it's set a new all-time high. So that just goes to show you that you have to recognize that the RRG is relative to the S&P. Just because something's lagging doesn't mean it can't continue to be in an uptrend.
Make new highs.
So
yeah, it's just the NVIDIA move is just unbelievable. And you know, I got turned on by this. What's that ARM acquisition by NVIDIA by listening to Kathy Wood's podcast. You know, I guess the big move behind that, again, I've been facing books for 2 weeks, 2.5 weeks, so I need to figure out exactly what's going on. But that ARM acquisition by NVIDIA, I talked about it on CNBC, I guess is a big catalyst for this. Do you guys understand? Do you guys kind of know what's going on? Sorry to put you on the spot there, but do you know more details on the NVIDIA story?
Personally not.
Okay, that's fine. Oh, I just saw we had an. There you go, taking the profits.
Yeah, sorry,
Hey,
I'm quiet. I'm managing trades here in the background.
Alerts to our,
perfect.
deal.
I've had a lot of NVIDIA, but it's become so much of an overweight in my portfolio. I do need to kind of to scale some back. Like I think it's like 15% of my portfolio now in NVIDIA. So we got to definitely take some off the table. Look at that. So yeah, markets are flat. So we also did, I tweeted something that was interesting yesterday, I thought, too. I was reading a Goldman Sachs report on the industrials, and the ISM, manufacturing PMI, Purchasing Managers Index, hit like 62. That's like the biggest level since 1987. So the PMIs are ripping from the industrial point of view. Industrials have been strong. And then there's another component of that report. If you look at the customer inventories on the ISM, it's at a 20-year low. So we have manufacturing activity picking up, but customer inventories are very, very low. So I think there's going to be continued catch up as suppliers restock and companies restock that would boost industrials. Obviously, industrials is a broad range, but I'm not looking for it to be all technology. I think industrials are going to continue to go. Copper's pulling back. We're getting a little bit of an ease off on this inflation talk. Gold, I still think it's useless in a portfolio. I hate to say it. You know, it just got cracked. So anyways, looking forward to getting back in and getting out of test world, man. I got to tell you, but super excited. So let me just finish in saying, I have some loose minimums in my mind. You might say, do you need $1 million to come in? No. Generally on your age, the younger you are, the lower minimum requirement that we have. But if you're at or around retirement age, I do ask for about a $300,000 to $400,000 minimum in retirement assets, because any less than that, and I'm a little afraid that the risk that we might take would be a little too much, and you might not be able to reach across enough assets to diversify. But yeah, so I don't have a hard target. It's case by case. So if you're unsure, definitely reach out, and just depends on what kind of life stage you're at. It's a one-on-one conversation. It's not a one size fits all. So that's what the financial plan will get at is, what's your target, what's your goals, where you're at now, so it's soup to nuts. It's top to bottom. So I'll leave it there. Anyways, that's enough for me, guys. Closing thoughts?
Good show, man. Congratulations. I'm sure you're glad to have gotten that behind you, and looking forward to the future, man. Looking forward to the future.
Thanks, guys. Thanks. Great job. Great job. And thanks for having me on, boys. And talk to you guys soon.
All right, guys. Sounds good. Hey, if you enjoyed the content, please give it a thumbs up. You can subscribe and turn on notifications to stay up to date with not only Todd, but the entire TA team. Tomorrow morning, we do have Alex's Crypto Lab Show, 9 a.m. Eastern on the Trading Analysis YouTube channel, youtube.com/trading analysis. I do have the 3:15 Eastern guest webinar appearance this afternoon. If you want to get signed up for that, you can see the link in the description. So good show, and yeah, we'll keep our eyes on the market, and we'll see you guys all next week. Team, excellent job.
See you guys.
Take care. See y'all next week.
See you around. Bye-bye.